can absolutely guarantee you that no one on YouTube is going to teach you this, so make sure you watch till the end. Welcome back to another video of the Alpha Traders. On this video, we are going to be covering a lot of advanced concepts about the volume analysis and how the big players operate the market and full retail traders like you and me. So with this knowledge, you will easily be able to identify what the big players are currently doing in the market and profit from those ideas. So if you are a complete beginner, I highly suggest you watch the first part of volume analysis because a lot of concepts in this might be a little hard to digest for you if you are a beginner and if you don't know basics of volume analysis. So like always, here's a quick summary of the video so that you know what to expect from the video and what you are about to watch. So let us get started with the video. So first thing that I want to introduce you. So if you are involved in the market for quite some time, you might have come across this market cycle thing where they say that market always move in these four stages. That is accumulation, uptrend, distribution, and downtrend. But I'm pretty sure that no one ever explained you what is the logic behind this phenomenon, why these four stages happen in the market, and what is the actual reason behind this happening. Because doesn't matter whatever happens in the market, there is always a logic and there is always a reason behind that happening. So in this video we are going to be cover and go in detail about what actually happens in accumulation, uptrend, downtrend, and distribution. Alright, so now that you guys know what the market cycle actually looks like, let us take some real life examples and let me just show you what are the logic behind what the market cycles and the phases. So let us take the wholesalers, let us take the big players as wholesalers of the market, and let us take ourselves as the customers, the normal people in a usual market. So let me tell you what actually happens in accumulation. So the name accumulation suggests itself that the big players, what they do is they start accumulating shares in huge quantities, but what they do is they accumulate them in very slow manner. So if I am a big player and have a budget of 500 crore rupees, if I try to buy 500 crore rupees worth of shares in a single day, the stock would hit the upper circuit, and obviously there will be wild moves in the market, and there are certain rules that the big players have to follow, like maintaining the volume and maintaining the quantity that they can buy, and these rules are set by SEBI. So what they do is they start to accumulate in such some sort of long period of time. This does not happen in a month or a week. It takes like 2 to 3 months, 6 months, or sometimes even a year to fully happen. So let me just show you what actually happens. So let's say I am a big player. I have a budget of 400. I have a budget of 500 crore rupees. So what I will do as a big player, I will buy slowly 400 crore rupees worth of shares slowly, so that the market does not know that there is accumulation going on. But what they do is they keep on buying every single day in some sort of quantities, so that they don't pump up the price extremely high. So that is what the big players do, and that is why it takes them so long to accumulate the shares. After they have accumulated 400 crore rupees worth of shares, and what was their budget? Their budget was 500 crore rupees. Now what they will try to do is they will start pushing that 100 crore rupees quickly and faster than they did the 400 crore rupees. So what this will do is this will push the price higher as a lot of funds is coming at the same time, and this starts the uptrend. This is what gives birth to the uptrend from the accumulation. So when the big players finally accumulate enough shares that they have that they needed to, they start pushing the price higher, because now they have 400 crore rupees worth of shares, and they will spend the rest 100 crore rupees of their budget in pumping the shares higher. And now you can see the price is already higher, and they have almost doubled their money from 400 crore rupees to 800 crore rupees. So this is what happens in accumulation, and this is what happens. This is why the uptrend happens. Now let us take an example of distribution and what actually happens in distribution. So if you look at this range of IndusInd Bank, the stock was completely sideways, and then it finally broke down and started a downtrend. So you can call this as a distribution phase because the stock completely consolidated. It was sideways after a good uptrend. So if you look at this uptrend over here, this was an uptrend, this was the distribution, this was the downtrend. So this was a complete market cycle in IndusInd Bank. And now let me just tell you what actually happens in a distribution phase. So now that the big players have finally pushed up the price higher, they are seeing huge profits in their accounts. They cannot just suddenly exit all their positions, because that will cause the market to crash. That will suddenly push out a huge amount of supply in the market, and that will cause it to crash. So what they do is they slowly exit their positions slowly and in a long period of time, so that the people do not find anything fishy that the stock is about to crash in the coming days. Now there is also another way to look at distribution. So let us say the stock was rallying over here, and now the big players, like I am a big player, I thought that this stock is overvalued and I need to make shorts on this stock. So what I will do is I will start accumulating short positions on the upside, and slowly accumulating short positions in the long run. And after I have enough positions, let's say I have 400 crore rupees worth of short positions, I will start pushing the stock lower and use my rest of the money, 100 crore rupees, like we talked about it before. And you can see over here in IndusInd Bank, it looks like exactly that happened, because after this, when the stock started moving down, you can see the volumes were exceptional. It clearly shows that this was a good, very well planned short sell trade by the big players, because you can see over here the volumes were very dry when the stock was distributing, and after they broke down, the volumes were exceptional on the downside. So this is what big players do. This is what the logic behind the market cycle is, and how the big players operate the market cycle and fool the retail traders, trap the retail traders, and make their own money. Alright guys, so now when it comes to identifying which phase the market is in currently, it is pretty simple. When the market is actually accumulating or distributing, the market does not form a trending structure. It is completely sideways, or if not completely sideways, it does not keep on making new higher highs or higher lows. So if you are a beginner, if you don't know how to analyze a trend, make sure you watch the trend analysis video. So that is how you identify the accumulation or distribution phase. And when it comes to the downtrend or uptrend, it is pretty simple. You can do it by just the structure of the trend, or if you look at the volumes over here, when the trend started going down, you can see how the volumes expanded on the downside. So this clearly says that the big players are interested in taking the price towards the downside. So just by looking at the price structure, just by looking at the price action and the volumes, you can easily identify what phase the market is in currently, whether it is accumulation, distribution, uptrend, or downtrend. So now coming to the shakeout candle. So this must be something very new for the people. So the shakeout candle, what does this mean? How to identify it? How to actually use it for your own benefit? So shakeout candles are nothing but counter trend candles, or a set of candles which are made by the big players to scare off the retail traders so they can accumulate more of the shares. So let me just give you a very simple example in this case. So you can see a very healthy uptrend is going on over here. Then there is suddenly 5 set of candles on the downside. So if a normal person is trading this structure, this would easily scare them off and cause them to sell their shares or exit their buy positions. And when they exit their buy positions, the big players are already sitting waiting to accumulate more shares so that they can push the price higher and make even more profit. So shakeout candles are nothing but candles made by the big players to shake out the weaker traders, the weaker hands in the market, so they can accumulate more of the shares. So now this is a big problem for us trader like us. So how to counter this? So let me just give you very simple characteristics of the shakeout candles so you can easily identify them. So shakeout candles usually don't, it is not usually as just a single candle. It is usually one to two candles that shake out the weaker hands in the market, and they are usually very strong candles. They are extremely strong candles. So what I mean by that, so if you look at this bearish whole candle, it is a very good strong bearish candle. And you can see there is another set of bearish candles over here, but the volumes in these candles are relatively lower, and this is one of the biggest factors that separates the shakeout candles from actual reversals. So you can see the volumes, even though this candle is very huge and bearish, the volumes are nothing special. The volumes are not exceptional. They are, I mean, they are high, but they are not exceptional. So the volumes are relatively lower in the shakeout candles. And the next thing you can identify is the shakeout candles do not violate the trend. So if you see over here, there's a structure of higher high and higher low going on, even though there is a 5 shakeout candles that did not violate the uptrend structure, right? And you can see over here, this trend went on to continue on the upside. So number one characteristics, the shakeout candles are a set of 1 to 2 candles, or even 2 to 3 candles. The next thing, they are relatively lower in volume, so this will help you identify a shakeout. And the number three, they do not violate the trend structure. So with this information, you can easily understand where the shakeout is happening, or if a reversal is happening. So the major difference would be, I would say, is the break of trending structure or higher volumes. So with this information, you can easily stick to your trade or hold on to your positions if you are in a position, so that you know that this is just a shakeout and the trend is going to continue on the upside. But what's most important is waiting for confirmation, like I always say. So if you are let's say you are analyzing a trend, you need to wait for confirmation. Even if you are analyzing that yes, there are shakeout candles going on in this current trend, you need to wait for confirmation before you enter the trade, or whatever action you might want to take. Alright guys, so now the next concept that we are about to cover is test of supply and test of demand. So even this must be something new to you, so let me just give you the definition and the logic behind this and why this happens. So test of supply, let us start with test of supply. So what this is basically, so let's say if I am a big player, and in this case in Chola Finance, the stock is in a very good uptrend, right? So now as a big player, I have to if I have to continue pushing this price higher, what I need to make sure is that there is enough accumulation, there is enough demand than the supply that is waiting on the upside. So by this point, it must be pretty obvious that the stock market works on the demand and supply. If the demand is more and the supply is less, the price will go higher. If the supply is more and the demand is less, the price will go lower. So what the big players need to make sure is they have enough accumulation, they have enough demand ready to push the price higher than the supply is waiting above over here. So what, as a big player, what I do is what I push the price above a little bit higher to just test how much supply is available up there, and to check if I have enough accumulation for that amount of supply or not. So what I do over here, you can see this candle, this was a test of supply, this was a test of supply, this was a test of supply, and these two small candles were test of supplies. So these candles are basically testing how much supply is above there. And when the candles realize, when the big players realize how much supply is over here, and if they find out that there is more supply than they have, than the demand that they have, they will start accumulating more and the stock will go sideways. So that is what exactly happening in Chola Finance. And now there will come a stage when there is enough accumulation on the buy side, and what will happen is they will be able to combat the supply waiting over here, and the price will just shoot up and go on the upside. So this is just an example, not an analysis. So I hope you get the point. So this was test of supply. So test of demand is basically opposite of test of supply. So in as we are able to see some test of demand in SBI stock. So over here you can see the big players are ready to push the stock down. There is a very good head and shoulders pattern as well, but they are testing demand out over here. So you can see whenever the price went down, it was absorbed on the upside. So this is some test of demand going on, and the big players are realizing that there is enough demand waiting on SBI, so they have to accumulate more short positions in order to push the price down. I know it is a little bit confusing, but when you start to spot it out on charts on your own, you will catch the habit of it and it will become just a normal thing for you. Alright guys, so that will be it for the video. So if this video gets a very good response, if we get 100 plus likes on this video, I will continue to teach these advanced concepts to you guys for absolutely free. So if you like this video, make sure you hit the like button, and if you are new to the channel, hit that subscribe button, because I will keep on putting content like this, exclusive content that there is no one else giving out like this on YouTube. So I will see you in the next video. Thank you so much for watching.